Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we help you understand all the latest cues of the stock markets, the closing hour of the day, and what can you really expect from the markets going forward from here. Let's first look at the benchmark indices. The performance so far through the day has been quite muted. You have been seeing the benchmarks down in the red by 0.4% each. Talk about the Nifty first, 17,825, 17,840. The levels currently on your screens, 50 points down for the Nifty. Look at the Sensex as well. It slipped below that 60,000 mark right in the first half of trading session. It's still hovering about 200 points lower in trade. 59,898, the current level for the Sensex as well. About 0.3% of a cut is what you can really spot here. In terms of the broader markets, mid and the small caps also seeing some decline, with the mid caps seeing a sharper fall of 0.5% and in fact underperforming the benchmark indices as well. But the interesting part is that the India VIX has slipped now 0.5% lower, 15.3 at this point in time. So the volatility may be easing slightly. In terms of the other sectoral indices of the Nifty 50, apart from say the IT stocks that are slightly up in trade, rest all of the sectors are actually down today. 0.5% of a cut for the Nifty Bank. Then the realty space is down as well. Pharma space seeing some cuts for that one as well. The auto space slightly lower in trade after and dragging for 2 consecutive sessions. The FMCG pack continuously under pressure, 0.5% right there too. So metals are also losing some sheen. Overall, it's a down kind of a market and a broad-based sell-off that you're seeing, barring slight gains coming in on the IT pack right ahead of the big bank earnings. Looking, going forward from here after the market hours, we expect Infosys to first come out with the numbers, and later in the evening, we do see HCL Technologies also coming out with its Q3 earnings. What kind of earnings can you expect? We'll speak to the guest about that as well, and how should you be really approaching these two stocks and the entire IT basket amidst these earnings seasons as well. Let's first look at how the top gainers and the losers are also shaping up at this hour. Towards the closing of the session, you do see L&T as the top gainer on the Nifty pack, 1.4% up. HCL Technologies, Ultratech Cements, SBI Life and JSW Steel all up by about 0.5% to 1.5% up in the trade. Downward side, you actually see Divis Laboratories as the top laggard on the Nifty pack today, 3.5% cut for that one. Axis Bank, BPCL, Reliance Industries continuously under pressure right from the word go today, almost a 2% cut, and Hindalco also seeing slipping away, 1.5% down in trade. But time now to welcome our guest for the day. AK Prabhakar joins in. Mr. Prabhakar, welcome and thank you so much for taking the time out for this discussion. And here's wishing you a very, very happy new year. But so far, 10 odd sessions already there that we have seen for the markets so far in 2023. What do you really make of the texture that's building up for this entire year? How do you really expect the markets to pan out? What are you making of this current 3-day consecutive fall that we have been seeing? And are we going to snap out of this lower trajectory anytime soon?
Good morning. Happy New Year to you and to the viewers. Now, I think, normally when the year starts, January month traditionally has been a negative month. There are many reasons for it. There is an outflow from foreign funds also. And we have budget, which is there in the first week of February. So people are, speculating too many things. So this volatility is not something new. It has been there for almost 20 years. I hardly seen 1 or 2 January, giving a positive return. But, it is not that, everything is very bad. Maybe once the result season starts, we had a very good TCS results. Scient has come with the results. I have not seen the result yet, but we have Infosys and even HCL Tech results. If they start surprising on the positive side, then I think market will start to perform. It depends on the result season and as well as on the finance minister view, how the economy from here on, we are likely to move. So these are 2 factors which will decide. So that is why market is slightly cautious, but it is not that we will be negative. Now it is just another 15-20 days we will get more clarity, and I think market will start to outperform. The outperformance will be sector specific and stock specific. It will not be overall recovery.
Okay, sector specific focus. We shall come to that as well as to which sectors may actually perform in this entire year and the strategy that investors must follow. But let's focus on the important point, and that is the earnings for the day. You also started by saying that TCS came out with its earnings. It started off on a slightly softer note, also on the back of the seasonality factor that kicks in for the IT companies in Q3. But as far as the expectations go for, say, Infosys first, we will come to HCL Technologies as well. What is your major expectation from the other major peer, Infosys, also when it comes to revenue growth and also the EBIT margins per se?
Our expectation is 1% growth, quarter on quarter basis. And we expect a revenue of 4,250 million. So that is our expectation. And when it comes to EBIT margin, now we have penciled in about 23.5%.
Okay. Okay. And what about the guidance? Would you really see that the company expects the revenue guidance to be broadly at like around 14 to 16 odd percent? Is that going to be retained at that point, or do you expect the guidance to be upward revised?
No, after seeing TCS, we feel Infosys will do better. So I think guidance will be maintained at the same level.
Okay, guidance to be maintained at the same level as well. What about the deal pipelines and the deal momentum, looking at the macroeconomic concerns emerging from the developed companies, which form a major chunk of the clients' revenues as well, as for Infosys, US, and also Europe right there, and the slowdown that is emerging right there. Is there an indication that one can spot as far as the deal momentum is concerned, a slowdown in the payments or a delay in payments, and perhaps any pricing that could be a sore point for the company?
We don't feel so. No, Infosys, TCS can mitigate this crisis. So I
Okay.
don't think in Infosys or TCS there is going to be any problem. Even there are few BSFI segment where we don't see problem, like Coforge or Persistent System. We don't see a problem.
Okay, and in terms of the management commentary, what would you be really watching out for that could give us an indication as to how should investors be really approaching the stock from this entire 2023 perspective?
Now, if they have a very good deal win, then that is a re-rating on the stock. But if they
Okay.
upgrade the earnings, then it is going to be something different. Market will give a thumbs up. But if they maintain also, I feel there will be a recovery in Infosys.
But then deal wins, what kind of deal wins would actually substantiate as good deal wins, and that would perhaps move towards a re-rating of the stock going forward?
Yeah, I feel so. No, a large deal win is something that will enthuse the market. Market has been negative on IT sector for almost 1 year now. So I
Hmm.
think we need to watch. I cannot speculate on few things.
Hmm. But then, do you think there could be an uptick from the previous quarter's deal wins? Total contract value deal wins for Infosys stood at $2.7 billion, which was the highest in 7 quarters in Q2. Do you think there could be a bump up from that?
No, we have not penciled in that. No, so I won't be able to comment on that.
Okay, let's actually come to HCL Technologies now. Your thoughts on the way HCL Technologies has performed in this entire 2022 and the quarters gone by for this financial year 2023, and what can really now one expect for Q3 and for the rest of the quarters as well?
Yeah, no, for quarter on quarter basis, it is about 2.5% growth is what we have expected on the revenue. Now,
Mm-hmm.
let us see how it pans out. EBIT margin at 19% is what we have penciled in.
Okay. In terms of the factors such as attrition and hiring trend, is that going to be a deciding factor as to how the stock will really move going forward from here? Since for most of the IT companies, attrition has come in as a major problem so far in the quarters that have been reported in earnings. But going forward, is that something that could decide the trend?
I think there is improvement. So let us hear the management commentary. Now, speculating before the result is too much for us to ask for.
Okay, and in terms of HCL Technologies earnings, what are you penciling in terms of the top line growth and the EBIT margins front?
Now, EBIT margin about 19% and revenue growth at 2.8% quarter on quarter basis.
Okay, and in terms of the constant currency, the impact of the rupee volatility that we have seen so far?
This is on US dollar terms. Whatever I've said is
Okay,
on US dollar terms.
okay. And in constant currency terms also, what's
Yeah,
the
CC
expectation?
terms also it is 2.8.
Okay, understood that. Going forward from here, what are the other factors that one should watch out for in the HCL Technologies earnings that will help investors really decide whether this stock is a potential buy? And so far, the performance, how do you rate it?
Till now, the performance has not been so good. Now, European turmoil is something, we would like to watch out for in HCL Tech, how they manage the crisis. So this is something we would like to see. And, even attrition trend is something we would like to watch out for.
Okay. Also, if you could help us understand, we have been seeing that partial wage hikes have been given, and that has perhaps had an impact on the margins so far. But going forward from here, what would you be really looking forward to as part of the expenses that could perhaps create an overhang on the margin front?
Now, speculating something, I would not like to do. No, let us see,
Okay.
what the management says, because it has been a very difficult time for IT. Now, we would like to hear the management out, and then only we would like to comment.
Okay, and in terms of the demand outlook, what do you really make for the company going forward from here? Is that going to be in a comfortable trend looking at the slowdown concerns?
Now, in HCL Tech, there might be some concern, but in Infosys, we don't foresee it. Now, but it is again a speculative comment.
Okay, understood that. Any particular preference from the IT basket that you may have fundamentally from all these three companies, TCS, which has already come out with the earnings, and from Infosys and HCL Tech, which is going to be coming out now? In terms of pecking order, do you have any preference?
Yeah, we like Infosys followed by TCS. Now, and we like Cyient. Cyient is coming with the IPO. They are demerging their operations. So we have a target price of 1,000 rupees on Cyient. So I think we are more positive on Cyient for a near-term upside.
Right. So, Science subsidiary has already filed the draft papers that you said for an IPO worth 740 crore rupees. So, that's going to be perhaps an incremental move on the upside. In terms of the earnings as well, I think we already got the earnings for Science also today. What did you make of the earnings today, in case you've had a chance to look at it?
Yeah,
The
no,
shares
we
have shot up. In fact, the shares have shot up about 4 odd percent, 882, 34 rupees of an upside. So the earnings impact has been quite positive. And in fact, the senior management team led by Managing Director and CEO Krishna Bodanpu has in fact said that the company has actually posted a strong set of numbers despite the overall seasonality factor that kicks in for Q3. So and analysts also largely expected the mid cap IT firm to really post good earnings this time around. Has that been up to your mark too?
no, we have not checked the numbers yet.
Oh, okay. So anything else in the mid cap basket that you would be looking at apart from these large cap IT names in the IT space as well in terms of earnings and the promising outlook that you may have for this year?
Yeah, we like LTI Mindtree. Persistent system is one more we are watching out for.
Okay, understood that. Let's move on from IT space to now overall, stock market views as well. We have been seeing that the auto space has been, quite buzzing in trade, although today it's been a muted one and the second day running for the Auto Expo as well. Most of the companies are looking to get the EV pie and most of the companies are also showcasing, including Maruti Suzuki, a first from their basket as well for the SUV space. The electric SUV has come out. Your thoughts on the entire auto space right now and whether these new launches could actually fuel some more growth for the space, which has been quite turbulent in the last few years?
Yeah, no, we like Mahindra in that space. No, in automobile and for auto ancillaries, we like Bharat Forge, we like Mahindra CIE, we like Sundaram Fasteners. Mahindra CIE is something, I think in the next 6 months to 1 year, we expect the stock to at least give 15% plus returns there.
All right, understood that. Mr. Prabhakar, any particular preferences in terms of stocks that you may be wanting to bet on right now, and for 2023 you believe the stock can actually give potential handsome returns despite the overall volatility that we've been witnessing in the markets? If investors focus on some particular stocks, they could actually provide some good returns to their portfolios?
Yeah, we feel private life insurance has not been performing in the last 2 3 years. Post COVID, they had some problem. So now, that is coming off. So we expect SBI Life to give a very good return in 2023. We see a lot of value in HDFC Life and ICICI Pru Life. No, so this is one segment we like. No, and we talked about Mahindra CIE, like that same thing. Bharat Forge, which has moved into defense also, we feel a lot of opportunity is there. No, there are reports that internationally defense manufacturing companies are in great demand. So I think Bharat Forge is one of the stocks which we like. No, and we also expect ITC to perform very good. We have
Okay.
seen that they are able to price their product higher. So I think ITC is something to watch out for. And nearing the budget, no, ITC is something we would watch very closely. We like in telecom, Bharati Airtel. If there is any correction, then we would look at it. Capital goods has been in focus, due to a lot of capex from the private segment and the state government and central government. So in that space, we like ABB, Siemens, and Cummins.
All right, noted that as well. Well, thank you so much, Mr. Prabhakar, for being with us on this show and discussing the overall expectations from the IT basket and how should investors be really approaching these stocks right ahead of their earnings too. Many thanks for joining in, and we shall continue to discuss more about markets in the days to follow too. Let's quickly look at how the markets are looking like right now. 15 minutes to close, 59,948, the current level for the Sensex. There's been a bump up from the lowest point of the day, 150 points currently down for the Sensex. Look at the Nifty as well. It's about 36, 35 odd points lower. So there's slight effort to come and pull back into the green. 17,858, but all eyes on like last 15 minutes to see whether this will be the third day running when the markets in fact close in the red. Broad-based sell-off still remaining, and some of the heavyweights like Reliance Industries also creating pressure, and because of which we are seeing a muted trade on the markets. But do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets. Don't go anywhere. Don't forget to subscribe to this channel, and also stick with us via our other social media platforms, Facebook, Twitter and Instagram. Many thanks for tuning in.
Men and women who built Indian industry, and the young guns who are shaping tomorrow's India. From storied careers